Old Mutual was founded in 1845 in Cape Town and is a global long-term savings, protection and investment group. It has a market cap of 116 billion rand and assets under management of around $380 billion. The group operates through brands like Old Mutual, Fairbairn, Nedbank and Mutual and Federal. It has a price-to-earnings ratio of 10.9 and a dividend yield of 3.6%. Would you say that this is the biggie within the sector?
Well, it's definitely the grand old lady of Cape Town, established, as you said there, as the South African economy was just getting up off its knees, because that's where the money was, in Cape Town. There was no interior economy in this country, and really life insurance is about aggregating capital through the generations over time. And of course it was demutualized and listed on the stock exchange when? In about 2000?
Late 90s, I think.
I'm
99.
trying to think, yes. So, I mean, it's been around then. It simultaneously decided to go on a global expansion spree. So Mike Levet, the CEO, decided to shell out and dispose of all of their industrial interests, because during the apartheid era they'd taken the surplus and acquired all these funny industrial companies, got out of those and went global. And that was, something that was, met with somewhat mixed results. They had some good deals, some bad deals. They got caught with the financial crisis of 2008, 2009, mid-sentence, you could say, with, deals all over the place. And they really took a severe beating, with the share price all the way down to around R4.50, having been at a high of around 20. It's back at the right level now, but the question is, should they ever, for a company of that size, have put themselves in that situation? I don't know.
So they have taken a beating, and a lot of market commentators are really criticizing them for their international ambitions. So what do you make of Old Mutual right now?
Well, I think there's a difference between looking back in the rearview mirror to what Old Mutual has done versus looking what the current management have done recently and will be doing in the near future. So you can see that in the share price recently, it's been quite strong the last 2 years or so. And that shows that they are trying to recoup the problems of the past. And they have done that through selling certain operations, like the Scandia Live operation. They're focusing on Africa now for their growth aspirations. They're furthermore looking to rationalize the portfolio further by listing their US asset management operations. So it's a big, complicated company, but they're trying to simplify it. And through that, we think there's a lot of value to be unlocked.
All right, Paul?
Well, that's quite tricky, because to go back to where we were talking earlier, I mean, these companies do well at times when markets are doing well. Why? Because their statutory reserves expand. Their clients who are, saving with them in terms of their retirement annuities and their unit trusts and all their investment policies are doing well, so they give them more money. So there's a kind of market cyclicality there. They don't follow GDP, they follow investment markets and perceptions with regard to assets. From here, I'm positive about global markets, and I suppose that means I should be positive about Old Mutual. I'm also of the view that companies are not going to give people pensions anymore. More and more and more in the decades to come, people must go out and get their own affairs sorted out. So the employee benefits, you add it all together, you take the stake in Nedbank, Mutual and Federal, all of that, I suppose it's going to do okay. My only concern is I don't really want things in the portfolio which go sky high when the going is good and then fall in the garbage when it's going badly. And I'm a little bit anxious, to come back to JP's initial comment, that these are companies that are prone to cycles of good and bad, and you're not quite sure in the long run whether you come out with anything after you've suffered the losses and the rights issues in the bad days.
So hot or not on Old Mutual, Jean-Pierre?
I think it's hot. I think if you look at it from a valuation perspective, remember we mentioned embedded value per share. In the case of Old Mutual, the embedded value per share is very close to 30 Rand a share. So it's trading at a significant, more than 10% discount to that embedded value. And because of that, we see value in the portfolio, but the third of the value of Old Mutual is actually Nedbank, the controlling stake in Nedbank. So on a sum of the parts basis, even though it has disappointed in the past, we like Old Mutual at this price going forward.
Hot or not, Paul? Old Mutual?
I'm going to go with not hot. Not a big fan of the asset class, and I'll explain that a little bit more with the forthcoming shares as well.